Good morning, it's Harvey Jackson. Just going to get through some of the news items here. Canola recommendations to sell to 60% on old, 50% on new. Interest rate cut day, Canada and US, or at least it's believed to be so, that they're both going to cut. There's also a StatsCan near infrared report coming, but less important, I think, than actual stocks numbers. But we'll have to see. It could impact the market, but I kind of doubt it, because when they took the image in late July, crops were all pretty green and robust, I think. But so here's the recommendation: old crops add to sales to if you're under 60% sold. If cash flow and movement are not required, consider June delivery and lock in the $680 a metric ton on the carry in the market. New crop, lock in your first sale at 675. LDC actually has some bids out there. I think it's minus 20 off of September, so I would be maybe getting a little bit of that done. Now, just take the cash price. We can defend it at some point. If the market all of a sudden has some really bullish sentiment, we could actually use the brokerage account to do that. November canola hedge. So you initiate a short position, 640 or higher. So and just to add on, like if you wanted to, in lieu of making a cash sale right now, we'll just go short. And we have that three-way on there in a lot of ways, or a lot of clients as well. And these are the expectations. So here's your expectations are just whether it's green or red at the sentiment here. Nothing really big to look at there, as far as I'm concerned. But that's my.
We got a potential.
Here's Darren Fesser.
Head and shoulder. So we have that left shoulder right here. We have the head, and then we have the right shoulder. We think that is the right shoulder. If this is confirmed, we have the neckline right here. We could see a push towards 468. This would be the targeted pattern move. Again, we have a lot of things, though, kind of maybe working against that move here. We have the 62% and 50% retracement levels. We also have the February trend line. We also have the 200-day EMA. You have a lot of high volume levels working here. So there is multiple things that really need to happen, if you will, to even see this type of push. We got a lot of headways, if you will. We got a lot of resistance levels, potential resistance levels ahead if we want to make this move here. So again, I like what I'm seeing here. Obviously, momentum remains bullish here. We're going to continue leaning to the bullish camp here.
And so that was canola. Here we're going to talk about
December wheat here.
Wheat.
We got to like what we're seeing here. This breakout in wheat could encourage corn along with it. Watch this resistance zone here right near this 534. We've been talking about it. I would say, hey, if you get a pop above the 20-day, you're going to see a quick pop, and you did yesterday. Up 9 cents on the December. The same thing will hold true, and I will repeat what I'm saying. Above 534, you will see a quick pop back towards 544, 545, and then maybe, just maybe, a secondary push towards 540. That July high volume. We're going to continue to lean friendly this wheat market. Now,
so here's the FOM, or not the FOMC, but the FOMC, the U.S. Expecting a 25 basis point cut. There's a lot of things weighing against this. The U.S. economy has lost momentum quickly in 2025 as you start the year. Job creation was running at a healthy pace, and about 230 jobs positions in the month. By August, we were only down to 30. So you can see that some of this expectation is this going to go down here. Wrong color on my pen. To go down here, and then you're into a little bit of trouble. Here you can see the actual job numbers in the green, and your consumer price inflation actually increasing. That's what they're worried about, is trying to hold it. They want the 2%, but that's not likely to happen. But they're worried about the stuff ahead. So what is important in the FOMC is what is he going to say for forward rate cuts. Bank of Canada is expected to do the same. They're going to cut very likely a 25 basis point. That'll be done earlier ahead of the U.S. So we might see a little bit of market move in our Canadian dollar. Australia promises a $735 million to launch bioindustry, and the reason I brought this up is canola is part of that, and that's just going to squeeze some of the supplies if other parts of the world, like China, is going to start being friendly to Australia and start buying. And I did, at the bottom of the article, I did talk about the opposition. And I think the opposition is just, hey, cheap crude oil as well. Here's Darren just talking about the
at least
dollar.
we're looking at this dollar. Dollar just continues to really ramp lower here. Here's the weekly continuous look here, or monthly continuous look. We continue to hold that May 2011 trend line. Boy, if we get below there, you open up a can of worms back towards 80.
Yeah, so if you do break that lower, you're actually going to have very friendly commodity values. It's going to look pretty favorable. Here we are. There's a bit of a bullseye of storms rolling across the U.S. Really nothing to speak of up in Canada right now. But when you go and look at the weather pushing out for a few days, looks like southern Manitoba and southeastern Saskatchewan is going to get some rainfall. Here is just your precipitation. You can see that there's lots of little waves moving across, and this is taking us all the way out to the end of September, basically, so and into the beginning of October. And here it's the same weather, but we're looking at wanting a lot more of this light color to show up, and that's your relative humidity being down. So it looks like it's flashing on and off. We do not have a huge opportunity for harvest with drying weather. Scared the dryers are going to have to be running. Oil seeds, canola is down 680. Rapeseed is down as well. Soybean oil is down. There is the EPA ruling that came out, I think, after the market closed, and it was a whole big nothing sandwich, but just saying that they're going to roll and have consultations for the next 45 days. And it's all about the waivers, and it looks like they're going to have anywhere from 100 to 0 waivers, which is just okay. You guys didn't make a decision about shit. But anyway, you can see wheats are down as well. So here's your canola, and you can see we bumped up against our 20-day moving average, and it did close above it, but then it basically just retraced back with all the other veg oils. Here's just a longer look of where the market low was down at the 560 area and where we're currently trading, and it doesn't look good, but you can see in these years in the teens, 560 was our highs, and I'll show this again on wheat as well when we get to there. It looks like a step up change, but we're being hopeful, saying that this downward trend on the rapeseed, and it has broken out, so it still needs to make higher highs above these other previous highs for us to be bullish. And European rapeseed rallying will help canola, of course, as well. The price differential between European canola priced in Canadian dollars is right now sitting at $132. Soybean oil futures, a nice little run up, big candle yesterday, pulled back off of its highs, but it's red today. And soybean futures here as well. Nice move yesterday, and then pulled back from its highs. So the turnaround Tuesday, now it's I don't know what you want to give you for a name for Wednesday, but garbage day, I guess. Here we are. Crude palm oil, long candle down. They did have a holiday, so it traded the negative news that showed up overnight here. Here's your weekly candle, or our daily candle, but here's your weekly on the Canadian oil or Canadian dollar. So we've actually bumped above my trend line on the Canadian dollar, and it's probably waiting for the news right now. Canadian dollar futures on the weekly, and it's less volatile, but if we can get back up to 74 cents, we should be maybe washing out some of our debt that we have in our trading account on US dollar futures. US dollar futures on the weekly, looks like we're going back to previous lows, and this is what Darren Fesser was looking at as well. But if we break down below this trend line and break through here, we've got a chance to get back down to that 90-cent range. Now that would be favorable for the U.S. traded commodities, soybeans and wheat and oats, as they would be in favor in the world. They would be cheaper. Let's have a look at wheat. A few green candles here, but no big moves. The expectation is if we get back to 40%, it'd be in this range right here, right around $6.10. Here's your step change that I was talking about that I showed you in canola. Here's wheat. We're right at that support value right now, which was basically the highs that we made in numerous years in the past, and the floor is below there as well. So we're hoping that this is the new floor and we move up. Kansas, above the 20-day moving, or the short-term moving average, below the 20-day moving average, just not there yet. Need to bust through that value to be able to be called a trend change. Chicago, it's got a long ways to before we can actually say we're going to make a higher high here. Milling wheat, same kind of trend. We're at that short-term moving average and trading right at it right now. Corn futures, still hoping that we can get back to a 200-day moving average. And the StatsCan model-based production report is coming out, and that's the August 31st view. That's all I have for you today.